So 6 months ago, I started investing into VTI, and I started completely from scratch, just like anybody else would that's getting into investing. I committed to investing $50 every single week, every single time that I get paid. The whole goal behind this was to make it as realistic as possible. And for those of you that are starting with $0 or just don't have any investments just yet, this is literally showing you that you can get started investing with any dollar amounts and at any point of time. So as you can see, I'm literally loaded up into Robinhood, and this is the broker that I use for majority of my investing because it's very simple and easy for you to use. And if you guys want to sign up to Robinhood, then the link is going to be in the description. You can go ahead and click that and actually sign up for yourself. You will get a free stock and I will receive a free stock. So just why not just take the bonus if you're going to sign up and start investing anyways. So let's go over and look at the position. If I scroll down right here, you can see that over the past 6 months, I accumulated about 3.7 shares. And this is due to fractional shares. You can invest whatever you got. You don't have to have $1 million into your investment account, or you don't have to have $10,000 just waiting to be invested. But yeah, just $50 every single week that I was investing into it. And as you can see, we're at $1,410. And this is literally in just 6 months. I have not looked at it. This automatically comes out of my paycheck every single Thursday. Almost $1,500 invested without me having to think about it, without me having to do anything. Yeah, like I said, it's very easy to get started investing. Now, if you don't know what VTI is and what ETFs are, ETFs are pretty much just a basket of stocks that you can purchase for just one price. And the ticker symbol, which is VTI, is literally what you're buying, which is the total stock market. So you're pretty much buying every single company into the US stock market. Now, this is going to be very diversified in terms of risk, right? Because if the US stock market is doing bad, then guess what? You're diversified into a whole lot of companies. Now, you also got like Amazon, Microsoft, and let me see if I can actually show you guys right here. If I go to the top 10 holdings, that's what I like about Robinhood. You can go to the top 10 holdings and it'll tell you that in the top 10 holdings, as you can see where it says 33.75, 33% of it is literally in just the top 10 stocks, which is Apple, Amazon, Google, which is Alphabet. You also got Nvidia, you also got Microsoft. So just a lot of companies that you already use and probably already know. Like the stock market is literally made to go up and not made to go down. So if you just hold over the long term, you'll probably be okay, especially investing into a whole economy like the United States. So yeah, let's get back into the position. So you can see that $1,410 is the market value, the total amount, which is what I put in, and also the returns. This is what I'm pretty much my assets valued at. It's 1% of my portfolio, so don't really mind that. But you can see the average cost is $343, which now the price is at $372. So almost a $30 increase, or it is a $30 increase, a little bit over. But that doesn't really matter because you just want to start investing right now. And whatever price you can get in right now is what you want to lock in. Or the price that it's at right now might just be the lowest price. We don't know. But yeah, the total return is $107. And that's literally within 6 months. So if you compare this to having your money in the bank where you're going to get around like 3 to 4%, literally in just 6 months, I was able to double that. Now, I know it's not the end of the year and it's not the final return percentage, but you can clearly see that I'm up, right? My money's still there. It's not gone. And it's into something safe, which is companies, right? Now, let's just say that you were to not even invest into this or just not have your money into the bank, right? Which hopefully you're into a high yield savings account, since you want to make sure that you're getting the highest return possible on the amount of money that you're investing. So that's why it's crucial that you actually start investing into stocks or just have your money in a high yield savings account, not a regular savings account. But yeah, you can clearly see that anybody can clearly get started investing without any knowledge, without having to know anything about investing. If you buy something like the S&P 500, which is just the top 500 companies, or you can buy VTI and just be diversified, right? It's not too risky and it's dependent on an entire economy. But before you actually get started, right, because you don't just want to be throwing money into the stock market, you want to make sure that you have no debt or just any high interest debt that you have. You want to pay those off before you actually start investing, because the average return for the S&P 500 and VTI is around 10%. But if you have any debt that is high interest that goes above 10% or just is even close to 10%, like something like 7%, 8%, that's considered high. And you want to pay that off as soon as possible before you even start investing, because there's no point of you losing 8% on your debt if you're trying to gain 8% on your investments, right? It's going to cancel out. So in order to start building wealth, you want to make sure that all your debt is clearly paid off, so that way it's not eating into your future capital or any money that you make, because that's what debt is literally you just paying interest or just fees on borrowing money. So hopefully you're not into debt and you can get started investing right away. But if you are, just make sure that you pay that off before you actually invest any type of money. Now, it's going to be different if you have debt that's 0 or 1 to 2%, because then you'll be able to put that money into the market and get like a 10 to 8% return. And then you pretty much pocket the difference. It's pretty much like the opportunity cost, right? Instead of you saving 3%, right? You can go ahead and make 10% or 8%, and then your debt is losing you 3%, right? Let's just say it's at 10 that your stocks are bringing. You pretty much make 7% because you make the difference between your asset percentage and then what your debt percentage is. So 7% is what you bring, and you're still in the positive, you're still growing. Now, if you were to pay that debt off, then you would actually lose out on 7% or whatever the difference is. That's probably a little bit too complicated for some people, but just remember, if it's low interest debt, something like 1 to 2 to 3% on your debt, then you want to invest that into the market, something like VOO, which is the S&P 500, or just the total stock market, VTI. And if you have high interest debt, something like 6 and above or 5 and above, then you want to pay that debt off as fast as possible. So that way you can start building wealth and it's not eating at your returns. So yeah, it's pretty easy to actually just invest. It's not really too complicated. Do not overthink it. Try to automate it. And yeah, anybody can literally get started. My mom can get started investing just as long as she sets up the automation between sending money to her investments every single week. Like, you do not need to be a rocket scientist or just anything like that to actually be invested. Now, I know what you're probably thinking. Why don't I just invest into individual stocks instead of buying an ETF, which is a basket of stocks? One, because it's going to be a little bit more riskier in terms of just putting all your eggs in one basket. So if that company ends up doing bad or just tanks, then all of your money is literally going to be at a loss, compared to if you buy a basket of something. Then if one company goes down, all the other companies are probably going to bring it back up, or should bring it back up. So just being diversified is literally one good thing, so that way you're not putting all your eggs in one basket. Now, that's why I like investing into ETFs, just because it's very easy to invest into, right? You're buying a basket of companies in whatever sector or industry that you want to invest into, and you don't really have to think about it since you're investing into a lot of different companies. I strictly hold just pretty much ETFs instead of doing individual stocks, so that way I don't have to look at the price charts every single day, every single week, and wondering, oh, how this company's doing, how that company's doing. No, with an ETF, it's literally all in one. The price is included in one. And you can clearly see that I just have to go in here, look at this price, and that's how my investment is doing. So that's pretty much just how I invest. Just only do ETFs, and I have my reoccurring investments where you can see right here, $50 every single week. And this isn't into my main portfolio, mainly because I use the S&P 500 instead of VTI. But you can choose one of the two, right? You don't have to have a lot of different ETFs. You can just have one ETF. Just make sure it's a broad ETF into a lot of different sectors and companies. And if you're willing to play a little bit risky, then just still buy the S&P 500. Still have it in your portfolio. Still have VTI in your portfolio. Do not go all in on just one industry. And even buying something like the VTI still holds the top companies that you probably are willing to hold. So yeah, that's currently how VTI is doing in 6 months. Completely starting from scratch. I was able to make $100 without investing or having to look at it or having to know anything about this. Hopefully you have investments and you have already started investing, but if not, don't worry. You can see how easy it is. And like I said, something like the S&P 500 is what you can get started with. So just invest whatever you have to invest. Everybody's going to be different. Everybody's going to have a different amounts that they're able to invest, which that all plays into like how much you make, how much you're spending per month, and how much money you have left over after all of that, right? paying off your debt and stuff like that. So comment down what your first investment was whenever you first started investing. Mine was the S&P 500 SPY, and leave a like on this video. We'll be doing an update in a few months, and if you are curious to see how you compare to 20 to 34-year-olds, then you can click somewhere right here. Like, comment, subscribe, and I'm out.